Well, staying with the earnings season, let's now go across to the management of Kotak Mahindra Bank, addressing the media post their Q4 results.
We stayed true to what we were really trying to do. We talked even at the time of the embargo that, look, the other businesses will continue business as usual. Obviously, the heavy lifting will be done by the corporate and the wholesale side of the bank. And so despite all of this, we were able to grow on an average basis, advances by about 16%, very much in line with our philosophy of growing about 1.5 to 2 times normal GDP growth. Deposits grew nicely as well, and our CASA ratio remained at 43%. With all these other difficult situations, we did have tailwinds in the capital markets. And I've always said that Kotak is like a plane that flies on 4 engines. So if one engine is having a little bit of difficulty, the other 3 engines keep us soaring. And our capital markets business and our asset management businesses did really, really, really well through the year. Our investment bank is number 1. Kotak Institutional Equities came soaring ahead. AMC did exceptionally well. So very, very strong performance on that. With all of this kind of put together, we were able to grow the book value per share, which is what I actually measure myself and my team on, because ultimately whatever pricing is given by the market is the pricing given by the market. If the book value of the share is growing, that is a good thing. And during the year, we grew book value by 21%. Now, of course, I'll get Devang to help and take us through all the financials. Strategically, our North Star is still to get customer-centric. And in that context, I wanted to talk to you about a few things. I think one of the biggest things we did was launch the group brand campaign. This was the first time that we brought the whole of Kotak Group together under one unifying brand. Rohit is here. Rohit is the father of this entire campaign. Done a fabulous job. I hope you guys have seen our ads, which come under the tagline of "Hausla hai to ho jayega." And we really believe as a company, and we really believe as employees of the company, that is true. And that is true for our customers, that is true for us. And therefore, it's not surprising that the resonance of the brand campaign actually has been very strong. And now you will see us roll out with that theme across other parts of the group, including the bank, as to how we make Hausla hai to ho jayega really, really come alive. The second thing which I'm really, really proud about is, yes, we were in technology embargo, but we used that time under the technology embargo to really strengthen our digital offerings. So I said when we come out of the technology embargo, we will come out much, much, much stronger. And I think that is kind of depicted by the strong new mobile banking app that we've launched for our affluent customers, and then the 811 new app which we've launched for our core India customers. If you've not tried those apps, I strongly recommend you do, because the user experience and the user latency and the ease at which you can get things done is actually quite amazing. We will continue to grow on this and hopefully see very good kind of results. The third thing I want to talk about is really about how much time and effort we put into really making our colleagues, helping our colleagues deliver for our customers. So we use technology to really help our frontline colleagues free up their time, make their life easier so that they can serve the customers in a much, much, much better fashion. More to be done, work in progress, but I'm very pleased with the progress that we are making, because this makes our frontline colleagues have the time and the energy to really spend time with our customers. And finally, what I'm super excited about, and actually we've just soft launched, is our targeted offering towards the affluent customer. Now, as of you all know, our private bank is about the best private bank in the country. We've come out with a specialized offering for the target customer just below the private bank. Our private bank cuts off at about 8.5 crores. We're saying for customers 1 1 crore to 8.5 crores, our segmented offering called Solitaire. And Solitaire really brings all the best of Kotak together, including a fabulous Solitaire credit card for our customers. We've just soft launched Solitaire, and as we kind of go along, we'll report our progress on Solitaire. But as a team, we are very excited about Solitaire. So as we move into 2026, our strategy won't change, our focus on execution won't change. That is what we really want to get done, and we'll do much more of that. But we are also mindful of the external environment. I mean, clearly, President Trump and the tariffs is something very much on our mind, and how we're monitoring the economy, monitoring our portfolio very, very closely to see whether there's any impact. Thankfully, nothing as yet, but monitoring it very closely. And then, of course, geopolitical kind of issues closer home, which obviously have to monitor. But otherwise, it's all systems go. We will make Kotak into a customer-centric company, and we will make our customers proud of us, and that should relate into great results for our colleagues and our shareholders, as well as our regulators. It's been quite the year, but I'm going in excited, and we'll keep going on this journey. With this, let me hand over to Devang, who can walk us through the numbers for the last year.
Thank you, Ashok, and good afternoon, friends. As Ashok mentioned, this has been a very eventful year, right? But I think one of the things which we have not compromised is on the clearly the risk, prudence, compliance, and governance principle for which Kotak is always known for. And our objective is to obviously transform this organization with scale, keeping in mind the customer centricity. With this, I will come to the financial performance, which was sort of adopted by the board today morning. Let me start with the consolidated numbers. Consolidated PAT for the year increased by 21% YOY at 22,126 crore. This, of course, includes gain on divestment of KGI. And if I exclude that gains, the gain on KGI, it is 19,113 crores, which is up 5% YOY. Consolidated PAT for Q4 25 was 4,933 crores. Consolidated customer assets actually grew 12% YOY to 5,37,000 crores as at March 25. Consolidated ROA, which is the return on asset, is 2.36, same as Q4 on an annualized basis. Consolidated ROE, return on equity, is about 13.12%, and for Q4 25, it is at 12.9%. Consolidated capital adequacy as per Basel III as at March 31st is 23.3 and a very, very comfortable CET1 ratio of 22.3 at the consolidated level. Consolidated net worth at March for the group stands now at 1,57,395 crores. The book value of the share, as Ashok mentioned, which is the barometer for the performance, at March 31st was 792, which is 20% up on a YOY basis. With this, let me start with the individual entities. The bank PAT for the financial year 25 increased by 19% YOY at 16,450 crores, including the gain on divestment of KGI. And if we exclude such gain, the PAT is 13,720 crores. PAT for the Q4 25 was 3,552 crores. Net interest margin for the bank was 4.96% for the full year and 4.97% for the quarter ended March 25. Advances increased on an EOP basis at 13% at 4,44,000 crores. However, if I look at the average advances growth, it was actually 18% for the full year. Unsecured retail advance, which is where we had a bit of credit concerns, including retail microcredit, as a percentage of total net advances stood at about 10.5% as at 31st March 2025. Average total deposit grew to 4,68,486 crore for Q4, up 15% on a YOY basis. Average total deposit for financial year 25 grew at 16% on a YOY basis. CASA ratio at 31st March is at 43%, and the TD sweep balance, which is we also call active money, grew at 18% on a YOY basis, now stands at 55,000 crores. Credit to deposit ratio, the CD ratio at 31st March is stable at 85.5%. At 31st March 25, the gross NPA ratio was 1.42% and net NPA ratio was 0.31%. Provision coverage ratio stood at about 78%. Capital adequacy at the bank also very comfortable. Total capital adequacy at 22.2%, of which CET1 was 21.1%. Standalone bank ROA is at 2.21%, and for the quarter annualized, it is at 2.19%. Standalone ROE for FY25 was 12.57%. Coming to the subsidiaries performance, I think subsidiaries have extraordinary year, especially the subsidiaries in the capital market and the asset management business. And actually that also demonstrates the strength of our conglomerate. And now the non-banking entities contribute 29% to the group profit. Specifically, Kotak Securities had a record full year profit of 1,640 crores, up 34% on a YOY basis. Kotak AMC and Kotak Trusteeship Company recorded a full year profit of 977 crores, up 86% YOY growth, with 49% YOY increase in the equity average AUM to just under 3 lakh crores. Kotak Mahindra Capital Company, which is the investment banking, full year profit again up 68% on a YOY basis at 361 crore rupees. Kotak Prime, which is primarily into car finance company, its assets grew at 16% YOY at 40,123 crores, and the profit PAT for the Q4 was 297 crores, up 34% YOY, and for full year it was 1,015 crores, up 14%. Kotak Life, which is into the life insurance business, quarter PAT was 73 crores with full year PAT of 769 crores. Kotak Life continues to maintain healthy solvency ratio 2.45x, which is much above the regulatory requirement of 1.5x, and the embedded value of the Kotak Life business grew by 16% to 17,612 crores. The Board of Directors of the bank has recommended a dividend of 2 rupees 50 paisa per equity share, having face value of 5 for the year ended 31st March 2025. Of course, this is subject to approval at the shareholder at the AGM. Thank you very much.
Thank you, Ashok, and thank you, Devang. With that, we will commence the Q&A session. But before we do that, a few points to be noted. We'll obviously take questions on a first-come basis. And since we have participants online, please use the raise hand feature online to be noticed, and the team will flag those questions to us. For those of you present in the room, you can also use the raise hand feature. Our team will come to you once we've called out your name, right? So that's point one. I know the raise hand means everyone goes up at the same time, but we'll try our best to keep the sequence right. Yeah, we'll do that the next time. Good feedback. Also, there's the Kotak team around the room, so if you guys can raise your hands first to be identified. Yeah, so they're going to be the ones that are going to get you the mic, so be nice to them. All right, let me start with the questions. And the first one, I think we'll start with Saloni because you just raised your hand first. Over to you.
Yeah, hi, this is Saloni Shukla from the Economic Times. Thank you for taking this question. So this quarter looks challenging for the bank. The PAT has been down. If you look at, the entire advances growth. We have seen retail microcredit, which is down, credit card is down. How do you quantify this? Provisions are up, 245%. Can you just sort of briefly tell us what are the challenges that you faced and led to the PAT decline?
Sure. I'll make some comments and then I'll ask Devang. But fundamentally, look, the microfinance business has gone through a very tough time. And so the microfinance business is what has contributed to the higher losses. And the microfinance business, obviously, we've kind of run down the book. But if you take the microfinance business out of it, the corporate bank has grown really well. All the subsidiaries have done really, really well. We couldn't grow the cards book because we were under embargo. That only started very recently. The personal loan book grew well because of the Standard Chartered kind of acquisition. So ex-microfinance, it's been really, really good. Microfinance has really been a story of an industry issue where the microfinance industry has taken a kind of beating. I don't know, Devang, anything to add?
No, hi, Saloni. Saloni, if we actually look at the some of the parameters like NIM has actually marginally improved in the last quarter. If you look at some of the credit parameters, okay, the slippage has actually improved. It is reducing. If you look at the credit cost, it has actually come down. Okay, so I think what you are saying is right in terms of absolute quantum of the profit. But if you compare with the last year, if you are doing a YOY basis, just be careful because in last quarter of the last year, we had quite a few one-off items and we have mentioned that as a part of the investor update, almost over 426 crore worth of PAT, which was a one-off item which was there. So when you are looking at a YOY basis, maybe that is the right inference what you are having. But if I look at the health of the parameters, if I look at the NIM, if I look at the NPA ratios, I think directionally it is improving over the sequential quarters.
So I have one more question for...
Can I just address the
Yeah.
asset growth that you talked about? I think if you look at the asset growth that we came out with, the consumer bank continued to grow. The commercial bank ex-microfinance continued to grow, whether it was tractors had a strong quarter and so did. I think some of the wholesale businesses, because of the extremely competitive pricing, some of the short-term advances, sort of reduced. But what we did was we turned to build the credit substitutes book, which was commercial paper and bonds, etc., where we expected because of the interest rate and liquidity a rally, and that's exactly what happened. So if you looked at it, consumer and commercial continued to grow. We had, I think, quarterly, Devang, a 13.5% growth, right, this quarter. But the wholesale, some of the wholesale, which was very competitively priced, we let go of that business and focused on credit substitutes. That's just for you.
Well, that's all the time that we have. It's a wrap from me and the team that put together this show for you. Thanks so much for watching. For more news and updates, keep watching CNBC TV 18.